As September draws to a close, XRP finds itself at a tense crossroads. The entire crypto market has been under siege. Over $160 billion was wiped out in a few days of selling. Broad tokens like Bitcoin and Ethereum led the plunge under the weight of a firmer US dollar and fresh regulatory jitters. Some analysts have dubbed this sell-off Red September 2025, noting roughly $162 billion evaporated in the first weeks of September. A hawkish Fed and geopolitical stress have buoyed the dollar and dampened risk appetite. XP, which had briefly rallied in late August, was not spared. One report shows it lost about 7% of its value over a single week. Over $1.7 billion of leveraged crypto positions were liquidated in the turmoil. Every failed support level and scary headline now ratchets up selling pressure. In this bloodbath, every chart candle matters. Investors are scanning on-chain metrics for any hint of support. The battle for the $3 mark has become more than a price target. It's a barometer of confidence in XRP. All told, Storm is treating $3 not as a magnet, but as a ceiling. Without a major change in sentiment or a new inflow of demand, that ceiling will likely hold. It's the kind of market drama where caution, not hope, dominates the script. Glassnode's HODL waves metric makes the situation clear. It segments XRP's total supply by the age of coins and visualizes it as colored bands. The band representing coins held 1 to 3 months traders active in the last few weeks has thinned sharply. According to the latest data, this cohort holds only 10.72% of all XRP, down about 5 percentage points in just a few days. In other words, coins that were fresh weeks ago are being dumped onto the market at high speed. The result is striking. Short-term traders have reversed from accumulation to distribution. These holders often control a large slice of supply and react quickly to market shifts. When they sell en masse, it floods the market with supply and drives prices down. This is exactly what's happening. Glassnode's chart is now hollowed out in the young coin band, a warning sign. Historically, similar plunges in the 1 to 3 month band have coincided with bigger drops in price. Now the support around $2.90 near the cloud's edge is being tested. If that breaks, it will pull the safety net from under $3, paving the way for an even sharper decline. On top of this, Sentiment's data show the big players are selling too. Whale wallets holding 10 to 100 million XRP have dumped roughly 90 million tokens from September 19th to 24th on Sentiment's supply distribution chart. Whale holdings plunged from about 7.89 billion to 7.79 billion. XRP in just a few days, an astonishing volume. These accounts, often exchanges or major funds, had been quietly accumulating earlier in Q3, so their sudden turnaround is ominous. From a market standpoint, this is chilling. Massive distributions like this tend to signal a lack of confidence and trigger panic among other traders. Each whale sale is a big flood of supply. Seeing that unfold often scares retail investors into selling. It's a bit like a signal flare. If the biggest holders are rushing for the exits, everyone else double-checks their stop-loss. In effect, a chain reaction kicks in. Whales selling begets more selling from smaller holders, and the price slides further. In short, the supply floodgates have been opened wide and buyers are scarce. The technical charts reinforce the bearish bias. On the daily Ichimoku cloud chart, XRP's price has slipped below the cloud, signaling a likely bearish trend for the rest of September. Both of the cloud's projected support lines are now overhead. Leading span A sits at $2.93 and leading span B at $3.04. In effect, the cloud is acting like an impenetrable ceiling above the price. For traders who watch this indicator, that's a classic sell signal. Price is under both spans and is being repelled downward. In practice, these cloud thresholds are now viewed as critical hurdles. Attempts to climb toward $3 have been knocked back each time. Traders interpret staying below the cloud as confirmation that sellers are in control. Accordingly, the path of least resistance is down. Analysts note that without a breakout back above these lines, XRP could easily retest the $2.78 zone. Put simply, the chart's cloud ceiling still looms overhead. It's implying continued bearish momentum until it finally gives way. Different investor groups are all now reacting with caution. The fast money traders, day traders, and algorithmic bots have largely pulled back or turned defensive. Many trading algorithms will now wait on the sidelines or aggressively take profit to avoid getting caught. Institutions and whale funds, having done most of their selling already, are simply sitting on their hands. Even smaller retail holders, watching the on-chain data and price action, are jittery. The usual buzzwords now are wait and no rush to buy. It's like a crowded poker table, where everyone has peered at their cards and decided to fold. For context, the futures market underscores this mood. XRP's funding rate has gone negative, meaning traders are effectively paying to bet on prices falling. In other words, nearly everyone is on defense. Without fresh buyers stepping up, every group's caution simply adds to the selling pressure. In this environment, sellers outnumber buyers at each price point, making any sprint toward $3 extraordinarily difficult. Still, should acknowledge the slim upside scenario. In crypto, anything is possible, so bulls cling to hope of a reversal. If global risk sentiment improved dramatically, or if a surprise positive catalyst hit, say, better macro news or a favorable regulatory update, whales and funds might swoop back in. Indeed, as recently as mid-September, XRP showed resilience. One node observed it was up 7.6% on the week, despite heavy selling, implying underlying demand around $3.04, but those conditions have since faded. The current readings show no obvious catalyst on the horizon. The factors that carried XRP near $3, like strong deposits at U.S. banks, have stalled, and chain-level metrics, active addresses, transaction counts, etc., are flat. Essentially, the updraft that lifted XRP to 3.30 is gone. Traders must prepare for both outcomes, either a quick relief rebound or more downside. A true bullish turn would require a sudden influx of demand that just isn't visible now. If that happens, a break above $2.93 could lead back to $2.99 and test $3.04. But in the current climate, the buying power needed to drive such a move is lacking. Pragmatically, many traders have shifted to protecting capital. They're defending positions or waiting for much lower entry points, rather than chasing $3 today. Meanwhile, the macro backdrop is definitely on the sell side. Risk assets across the board are under pressure. Equities are choppy, bond yields are elevated, and the dollar is strong. History shows that cryptos often follow tech stocks and dollar moves. For example, as Bitcoin pulled back from its recent highs, it dragged most altcoins down, XRP included. The current market is essentially a high-alert risk-off regime. In this setting, even tokens with solid fundamentals can slump. Practically speaking, any surge in fear, like a stock market wobble or financial news scare, can spell trouble for XRP. Notably, indicators like the Crypto Fear and Greed Index are flashing fear, reinforcing that broader caution. Given all this, the overall data suggests that the $3 target is out of reach for now. Every on-chain signal and every bearish chart pattern lines up against an immediate comeback. Only a sudden change in the story could reverse course, a plot twist like unexpected strong demand, or an easing of wider market fears. But as things stand, the narrative reads as a cautionary one. The final chapter remains to be written. Will bulls muster a comeback, or will the bears close out September on top? For now, the story clearly favors caution right now, decisively.